What's happening, everyone? Aaron Jackson here with the Rotation Report. This is not financial advice. What do I look like? One of those Federal Reserve insider traders? Got the Fetterman look going on. No, don't forget about Rosengren and all the entire insider trading scandal they had a few years ago. When we're taking sides on Trump versus Powell. Sure, Trump shouldn't be acting like that, but come on, let's not act like these Fed members are just, these central banks are just some sanctimonious, innocent, entities here, right? But yeah, Trump is running wild, and man, really don't know how to deal with all that. So we might as well just get into it. First up, we talked about the biotech index. How about it? How about it? Dow Biotech ahead of the JP Morgan conference. You got that nice little ripper there in this, what appeared to be a breakout. Um, mm, It's flopping pretty hard here. These large cap biotechs, we don't want anything to do with that at this moment. Looks like whole thing might go fake breakout, but it's not bearish biotech, bearish healthcare. Sure, the big ones, but there's some news out that there's regulatory flexibilities for cell and gene therapies, which trust bioscientists, they make the DNA, and that got a real nice breakout here. So cell therapy, like picks and shovels, we'll be covering that a lot on the old Substack moving forward. But, those type of things, they've got a pretty solid future, if anything does, in biotech. And then, Iran's in the headlines, and, shout out to the people of Iran, man, brave people fighting back. They've had enough, and, some real courage, not these fucking, Free Palestine, whatever protesters. We're talking real courage, really putting your life on the line. God bless them. And but oil, it just looks like a coiled spring here. Looking pretty good. And the theme in general has been commodities, right? For once, it's pretty hard to get commodities to set to outperform the S&P 500. And boy, look at them, that giant shift in momentum on this last downswing here. So definitely expecting commodities to outperform at the indices, the major indices, S&P 500, NASDAQ 100. And here we are, metals and mining versus the S&P 500. Look at that, completing a decade-long base, decade-long highs here. That's just holy shit. Very rare moment in time here, and you just got to appreciate it. And I think commodity allocations are really low, metals allocations are too low, and they're probably going to be more insulated than the market. Just going to outperform however we want to cut it, and any sideways action, we'll want to take advantage of that moving forward. And we're talking like energy too, right? And when I think energy, I think who was leading energy last year? It was solar, and Nextracker was like the solar leader last year. Just awesome chart long term. So it's popped back above 50-day moving average here. Can this base keep working out here, keep pushing higher? Very interesting. Definitely want to keep an eye on that one. Then we've got Pan American Silver. Yeah, silver's hot, right? But again, really, we're chasing precious metals on what? Okay, war headlines, that's fair. But then what? There's false stories about how the banks are short so much silver, and it's actually just commercial hedgers. It makes you wonder. It's a lot like crypto when they put out these fake stories, and then it's just a bunch of bullshit. So, silver looks very good above 80. But we've got Pan American Silver, the leading silver miner. I think this is number one reference here, running into an extension target zone here in the mid 56s. So would not be surprised if it takes a pause here. And then, we shift back to energy. They had the Venezuela talk about, oh no, we're going to flood all the market with the Venezuelan oil. Well, that would hurt the Canadian producers because it's a similar type of oil. Meanwhile, Suncor is one of the best energy charts in the book. Last week it closed at brand new 52-week highs, multi-year highs. Hell, now it's what, 13, 14-year highs here. So looking good in the Canadian oils. I think we want to go there first because they are going to mint the most money regardless. Whether that's Suncor, I think there's Canadian Natural Resources. That's a little further down the list. And then there's Imperial Oil. That's a good one. We'll see if Imperial can get through 95. But, it's just a shifting market environment, right? lately the materials have really started to perform here. Now they're back to the 2024 high. Definitely the big theme here is like, okay, you want to do all this defense spending. You want to build these data centers. You want to do all this building, build the Taiwan semi fabs in Arizona. The price of everything, the cost of all the materials, everything you need to build it is just going way up. And, that is just pretty much the theme of the market. And, sticking with the commodity theme, energy versus gold miners again, like gold, it just keeps getting that bid because everyone's still piling into commodities and they don't own enough commodities. Well, I think, again, we're seeing right here, you would prefer energy assets versus gold miners pretty clearly. But that, I guess it doesn't have to hold, but like it's pretty much, I mean, the move has happened here, right? And then next up, like I say, we're building shit. The S&P transports multi-year highs going for what, nearly 5-year highs here. The base is looking good. That's RSP, you got the small caps, all these things and breaking out of these bases and just trading really well. Oil services, again, it's actually sustaining here, pushing through one of the thicker resistance levels in the book. So that's pretty impressive. But now it gets really interesting, moving to the financials here, right? And Trump is out trying to cap these credit card rates. And okay, so that's weird, right? Like that's not going to work. That's just going to kill credit creation. Maybe he's trying to like slow credit creation, like in general, but for like the broad market, that's not. We want more credit creation. We don't want any stopping of that. So not really sure how big that's going to be. But you can see the FAS, the 3X Bear Financials Index, that could be a pretty nice little bottom here just forming just on this news here, right? So getting this bottom to form, that could be flipping the script. And if we look at the S&P banks, it was interesting. JP Morgan reported this morning, Jamie Dimon, for the first time for 3 years, this guy's been like, I don't know about this. I don't know about the economy. I don't know. And then he's like, oh, there's cockroaches everywhere. And then this time he's like, well, actually, things are fine. The consumer's fine. I think that's what's really actually going on. Like consumers still have money, but it is odd that he changes his tune here after, always being cautious for quite a long time. And you can see bank index, ETF, KBE, no momentum on these pushes higher, just none. And when you have it, it's like, oh, wait a minute, we're still kind of stuck below this 2024 high. I don't know. Is it going to be okay? Well, one reference I'm going to be using is Citigroup. I think they report might be to Wednesday morning, might be Thursday morning. But yeah, just watching this giant channel from the post great financial crisis right here, this 116, you can back up to 125. Okay, that's pretty nice. Get through that. But if not, there might be something going on here, and we know, all the fraud in the system, and you cut off the fraud, and then somebody doesn't have collateral, and then all of a sudden the big bank has billions of dollars of losses they have to write off just like that, right? So definitely worth keeping an eye on. And then, man, I'll tell you, NASDAQ 100 is really dragging ass here. Like we were saying about the spending on all the infrastructure projects. Not great when the costs are going up. And if they don't have the proper escalators in their contracts, well, shit. All of a sudden, the costs of your projects are up 100%, really ruining your financial plan there. So I think the risk is lower, but it's weird because this is completely different. This is just not the message of the rest of the market. Even the NASDAQ 100, the 200, from 100 to 200 QQQJ looks good, looks fine. It's working. So I don't know. We've got that tariff news tomorrow. The back half of this week, it's going to be really interesting. People are just piling in. Speaking of piling in, in the shortage, the semis, there's shortages everywhere. And man, those semis, those growth stocks, they are trading great, aren't they? My goodness. Yeah. And we got another one, Coherent. I think it's indium phosphide. I don't know. Anyways, you can see 50-day moving average caught up. Great little base over base look here. Looking pretty good through 200. That'll be a sweet reference. And I tell you though, the thing about chasing in this market is, definitely the quants are on to you. Like, no doubt about it. Look at this STX Seagate. Tried buying this pullback here. My God, look at that. You get the breakout. Oh, back test looks pretty good. Flush you, and then they get the gap fill here. So we don't like this loose, sloppy price action. It doesn't mean it can't keep working, but some of these things are telling us like let's just calm it down a little bit. And an awesome referencer is going to be Apple. They signed a deal with Gemini just yesterday, and I think that's the winning move. And a long time now, people keep saying no, Apple's in trouble, Apple's in trouble. Apple remains in a structural uptrend. Now, does that change? Does that change soon? And then this thing actually loses the 260 and rolls hard from here. That would be interesting. Definitely something to watch. But until that happens, the writing may be on the wall, may not. I don't know. Still a structural uptrend for now. But I'll tell you, this weakness in software, like all this money, if it's coming into the metals, where is it coming from? It's coming from software. We've been talking about that for 8 months now. It's coming from maybe the big tech stocks, really breaking some models here. And just look at Adobe, man. It had every chance after a little fake breakdown around 330. It had every chance to reignite, to hold up. It's just bleeding out, and it's just not. So software, it'll be impressive to see any software that can stick and hold up. And another name that might be a source of funds, Meta, right? They're kind of just torching endless money on the AI, like they were torching lots of money on the metaverse, right? Well, let's keep an eye on this relative level here in the Meta versus the Nasdaq 100. If that breaks down, I think this thing can repeat 2022. Okay, maybe not 80%, but I think it's what, 625, 630, something like that right now. Yeah, 400, not out of the question. And then, finally, man, but that's on the flip side. On the flip side, the smart glasses demand is hot. It's strong. Apparently, they doubled their orders for the Warby glasses so they could have more smart glasses. So, we go back to this, like, okay, they're torching money on AI, but wait a minute. What if they have the next computing platform? It's entirely possible. So, get really bearish on the relative breakdown here. But, man, those smart glasses, something's going on with the smart glasses. People like them. Whether that's going to be Google Gemini, I think that Google would be the pick for the smart glasses. Maybe Google doesn't make some hardware with Apple, but, this Warby Parker, like, it keeps coming back to this 30 zone. I know people don't like the glasses or whatever, but it's a cool concept. So, could get really hot here, kind of under-owned, kind of followed. But yeah, that's going to do it for me. Let's see if we got anything else we want to talk about, just this defense bubble. Maybe you get some selling if the U.S. moves into Iran, maybe you get some selling there. But for the most part, I think that yeah. Yeah, read the banks and the credit cards. Don't forget Trump. He bankrupted a casino, and you know what they say: if you can bankrupt a casino, you can bankrupt a country. And it is very odd that like Trump, Bernie Sanders, and Liz Warren all kind of agree on a policy. That's like the holy trinity of bad economic policies. So could be a terrible thing. Could be blowing up a lot of shit down the road, and we definitely want to keep an eye out for that. So definitely keep an eye on the short financials and the banks in general, because if something's going to pop up, that's where it will pop up. But if you like the video, do me a favor and like the video. Until next time, friends, y'all have a great day.